Have you ever noticed how some people seem to get richer every time the world feels like it is falling apart? You have worked hard for 40 years to build your savings and secure your future. You have sacrificed vacations and long weekends to ensure that your family is taken care of. Now you look at the news and you see the market dropping and you feel a heavy weight in your chest. The flickering red numbers on the screen feel like a direct threat to your peace of mind. It feels like everything you have built with your own two hands is at risk of disappearing in an instant. Most people see a market crash and they feel a deep and overwhelming sense of panic. They watch their account balances go down, and they decide to sell everything just to save what is left. But there's a small and quiet group of people who look at these same red numbers and see the greatest gift of their lives. They understand something fundamental about the world that most people completely miss. Quality content and real success do not come from guessing what might happen next. Success comes from understanding the hidden mechanics of how wealth actually moves from one hand to another. Today, we are going to talk about why a market crash is actually a massive wealth transfer event. I am going to show you how to protect your legacy and turn this chaos into your greatest advantage. You deserve to have total peace of mind and complete control over your financial destiny. Let us start by looking at a very uncomfortable truth about your money that the banks do not want you to focus on. Is the cash sitting in your bank account really as safe as you have been led to believe? Think back to what $100 could buy for you just 4 years ago at the local grocery store. Today, that same $100 bill only buys about $85 worth of the exact same goods. Inflation is a silent thief that steals the value of your hard work every single minute of the day. When the market drops, many people think they are being safe by moving their money into cash. In reality, they are moving their money into an asset that is guaranteed to lose purchasing power over time. You have every right to be worried, because the world today does not look like it did 20 years ago. The old and traditional advice of just playing it safe is no longer enough to protect your family from the rising tide. We need to understand what is actually happening deep inside the engine when the stock market drops 30%. Most people believe that 30% of the world's wealth has simply evaporated into thin air like water. But the physical companies are still there, and the buildings are still standing in the city centers. The employees are still showing up for work and solving problems every single morning. The products are still being manufactured, and the services are still being delivered to millions of customers. The only thing that has changed is the price that a panicked person is willing to pay today. Think about it like owning a high-quality rental property in a nice neighborhood with a reliable tenant. Imagine the foundation is strong and the roof is brand new and the neighborhood is growing every year. If the housing market crashes and the value of your house drops on paper, do you suddenly lose your money? Your tenant is still paying the same rent check every month, and the house is still sheltering a family. The intrinsic value of the asset has not changed one single bit because the market is having a bad day. The only way you lose money is if you allow the fear to take over and sell the house for a lower price. The stock market works exactly the same way for those who have the patience to understand the game. Market crashes do not destroy wealth. They simply move it from one person's pocket to another. Wealth moves from the people who are impatient and scared to the people who are disciplined and calm. This is the fundamental mechanism of how the wealthy become even wealthier during a global crisis. When everyone else is selling their quality shares at a massive discount, someone has to be on the other side buying them. The calm investor recognizes that the exact same world-class companies are now on sale for half the price. Imagine your favorite store decided to put every single item in the aisles at 50% off for one day. You would not run away from the front door in fear just because the prices were lower than yesterday. You would bring your truck to the loading dock and fill it with as much as you could possibly carry. Yet when the stock market goes on a massive sale, most people run away as fast as their legs can carry them. They see low prices and they assume that the world is coming to a permanent and final end. This creates a life-changing opportunity for anyone who can bypass their own primal emotions. Let us look at the long and steady history of the S&P 500 over the last century. Every single crash in recorded history has eventually been followed by new and higher all-time highs. The Great Depression of the 1930s and the financial crisis of 2008 were both terrifying. People thought the entire system was broken and that it would never recover for their children. But those who stayed invested and kept their cool saw their wealth multiply many times over the following years. The world did not end, and the strongest companies became even more dominant in the global economy. If you invested $10,000 at the bottom of the crash in March of 2009, that money would be worth over $60,000 today. That is a 6 times return on your money in just 15 years of doing nothing but waiting. By buying when things were on a deep sale, you compressed 20 years of normal growth into a much shorter time frame. This is the hidden power of the compounding accelerator for your retirement and your peace of mind. Investing during a crash is like being given a massive head start in a race that lasts for decades The extra shares you buy today at low prices will pay you rising dividends for the rest of your life. Those shares will grow and compound and eventually represent the most significant portion of your total wealth. You are not just buying numbers on a screen. You are buying years of future freedom at a huge discount. For a person in their 50s or 60s, a market crash can feel like a disaster for their retirement timeline. But if you have a strategic plan, it can actually be the one factor that secures your legacy forever. The key is to understand the profound difference between temporary volatility and actual permanent risk. Volatility is the temporary movement of prices that makes us feel uncomfortable and nervous in the short term. Real risk is the permanent loss of your hard-earned capital that happens when you sell during a panic. The market going down is not the actual risk, but your emotional response to the crash is where the danger lies. We must learn to look past the headlines and focus on the quality of the assets we own. So how do we actually handle the daily stress of watching our portfolios drop in value during a crisis? The first and most important step is to completely automate your entire investment process from start to finish. You should set up your contributions so they happen every single month, regardless of what the news says. Whether the market is up or down, your system should continue to work for you in the background. When you automate your decisions, you remove the need to be brave when the world feels loud and scary. Your emotions cannot sabotage your future if the decision has already been made by your clearer self. You should also look at the proven rules of income for a successful and stable retirement. The 4% rule is a classic strategy that has been tested through many different market cycles. It suggests that you can withdraw 4% of your initial portfolio value every single year. Even during a severe market crash, this rule is designed to keep your principal balance safe over the long term. If you have a $500,000 portfolio that generates $20,000 a year in income, when you combine that with an average Social Security benefit of $23,000, you have a very stable base. That gives you an annual income of $43,000 without ever touching your main bucket of savings. For a couple with 2 Social Security checks, that number jumps to over $66,000 a year. This provides a comfortable and dignified middle-class life in most areas of the country. You do not need to be a financial genius or a math expert to reach these significant milestones. You just need the iron discipline to stay the course when everyone else is running for the nearest exit. Think about the powerful legacy you want to leave behind for your children and your precious grandchildren. Do you want to show them how to be a victim of the market or how to be a master of your own life? The wealth you build today is the foundation for the freedom and security of the next generation. Every time you choose to stay calm instead of panicking, you are securing their future opportunities. The strong companies that survive a crash often come out much more powerful on the other side of the storm. They buy up their smaller and weaker competitors, and they find new ways to operate with more efficiency. When you own a broad index fund, you own all of these survivors and their future exponential growth. History shows us that after every major crash, there is a period of explosive and sustained recovery. The people who had the courage to invest during the dark times get to ride that entire wave of prosperity. The next crash is coming eventually, and we do not know exactly when it will start or what will cause it. But we know with absolute certainty that it will feel scary and uncertain when it finally arrives. The news media will scream that the world is ending because fear sells more advertisements and clicks. Your friends and neighbors might tell you that you are losing your mind for staying in the market, but you will have a critical choice to make. When that moment of truth finally comes to your door, you can join the majority of people who allow their fear to dictate their future and their family's wealth. Or you can join the small minority who recognize that true opportunity is usually disguised as a disaster. One group will look back 10 years from now with a deep and painful sense of regret for what they lost. The other group will look back and realize it was the single best financial decision they ever made in their lives. You have worked too hard and waited too long to let a temporary drop in price take away your ultimate dream. Reframe the temporary pain of a market crash as the necessary cost of admission for long-term wealth. See the red numbers as a once-in-a-lifetime clearance sale on the future you have always wanted. Stay focused on your long-term goals and tune out the loud and distracting noise of the present moment. Your tipping point is coming where your money starts working much harder than you ever did in 40 years. True financial independence is not just about having $1 million on a piece of paper in a folder. It is about the total freedom to wake up every day and decide exactly how you want to spend your time. It is about knowing that your family is protected and that your bills are covered for the rest of your life. That is the true and lasting reward for having the courage to stay invested through the heaviest storms. Thank you for spending this valuable time with me today to focus on your financial well-being and future. Please leave a comment with the word READY if you are prepared to take total control of your destiny. The journey to wealth is a long marathon, and the most important step is the one you take right now. Keep your head clear and your eyes fixed on the distant horizon of your dreams. I will see you in the next video as we continue to build your unique path to total freedom.